Okay, hello. So this goes out to my main man Steve, who asked about Fibonacci retracement extension tools. So I thought I'd do a quick overview on how I use them and how useful they can actually be. Also occurred to me that maybe you should just do a little bit about TradingView, the platform, as well, because a lot of you may well not have really used this and it might look a bit intimidating. So a quick heads up on how you can use it. When you start off, you're going to need to get yourself an account, and you'll be presented with a slightly different screen. So I know when my mum did this, yes, my mum does this, she got confused by this screen because there's a lot going on. You can sign up, it's free, you'll end up with your own sort of details, and it will automatically log you in every time. So, but when you start off, you're going to need to find something to start with. So I would recommend looking at Bitcoin price, because everything tends to revolve around that. Just choose any of these. Okay, and then you're going to get this, and again, this is not very useful. So what you need to do is always get into this interactive chart. Okay. All right, and this is it. So this is where we go from here. This is how to start looking at things. So this is a very basic view. What I've got here is Bitcoin, and it's on a weekly view. So that's the first thing to understand. The other thing is that when I go into this section here, I can look for any altcoin. Okay, and Bitcoin itself is traded on multiple platforms. There's loads of different places. You can buy it on Coinbase, but you can also buy it loads of other different places. So if you put BTC in, what you're going to see is loads of different things, and it actually tells you what the exchange is that the price is coming from. So the first one here is Coinbase. A lot of people use Bitstamp and the dollar, because that's a really big one. You can choose any one that you like. I'll go with Bitstamp for this one. And they're just slightly different. The prices are slightly different on exchanges, so don't worry about it too much, because you're still gonna make loads of money anyway. So here we go. So this is a weekly view. So you find with this trading view you get an awful lot of adverts, which is annoying, but it keeps it free. So okay, so what am I doing here? So use your mouse. You can move it left and right, up and down. Okay, because these charts go through the roof. Well, this one is. You might need to scrunch it down. Oh, hello. Let's get rid of that. That's obviously my target there, 30,000. And I'm using my mouse wheel now to kind of scrunch it that way. So if you want to scrunch it kind of horizontally, use your mouse wheel. And if you want to do it vertically, you need to grab the price, click, and move it up and down. And that allows you to kind of zoom in and zoom out and make it fit the screen as you wish. All right. So practice doing that if you've not done it before. Right, so that's that. The next thing is this not a normal line. These are called candlesticks. It's the best view to have. What we see with a candlestick is dependent upon the time frame. So up here we've got the actual thing that we want to look at. In this case, it's Bitcoin. And then the time frame is the next thing. So a weekly view is obviously a very big picture, but if we want to see the day, then just change that to day. And all of a sudden it's the same thing, but now we can see every little candle is actually a day. So that's the same, it's the same graph, but there's just an awful lot more detail in it, right? And I can start to zoom into where we are now. So I'm using the mouse wheel and I'm using this to scrunch it or move it around if I need to. Okay, and again, if you want to go even further details, so let's say I want to just analyze this area here, I go into let's say 4 hour would be the next decent view, and I need to scrunch it up again, and that's the actual view. Okay, so Fibonacci Tools, here we go. So I'm going to go with the weekly view. So one thing to understand, whenever you're analyzing, the higher time frame trumps everything. So like you should always look at a weekly view first and then go into daily view, 4 hour, 1 hour, etc. So you can spot much bigger trends on a bigger time frame. So at the moment every single candle represents a whole week's worth of time. So this is the amazing story of Bitcoin so far. Going for, move this out of the way, you can see going from 2013 way back here, well, and before that, right up to the current day, and we see this phenomenal growth here. Okay, so could we have predicted any of this? And that's the kind of thing that Fibonacci tools are all about. So Fibonacci, Leonardo Fibonacci, some geezer back in the, I think it was like the 12th century or something, was actually a trader, not like this, but you know, actually real stuff, but also a mathematician, and he figured out, oh, he didn't actually figure it out, I think he brought it from, it was Indian thinking, or Indian mathematics, and he was really interested in it, and he brought it, sort of westernized it a little bit, and he got the name of it now. But it's a really interesting thing, very basic. Google it. Steve, you'll know this because of your fine art background, but Fibonacci, call it the golden ratio. So we're going a bit off piste here with this trading, but
like there's fractal patterns in cruciferous vegetables. Just have a look.
Okay, so I'm going to try and do a quick overview of Fibonacci tools. I just tried to do it, it took ages, so I'm going to do it a lot quicker. So here we go then. So first off, the Fibonacci trend-based extension is how it works basically. Select the tool, take the start of a trend. So this is Bitcoin, so right back here is literally the start down the bottom. Okay, and then you go to the next high, which would be about here, and then the next low, which is about here. I'm just going to zoom in so we can fine tune this. It's a bit hard with Bitcoin because it's got such an insane graph. Here we go. Right. Okay, so basically start off at the start of the trend way back when. Go to swing high. It's called swing high. I'm using the candle bodies, not the wicks. If you zoom in, you can see that there. So that's where the coloured bit ends, not where the spiky bit goes to. I'll explain that later on. I'm thinking that'll get us a better result, but I don't know, you tweak it later on. And then the low, which was here. So the low was in 2015. Okay, so this is the extension tool. So take the start of the trend, go to the top, and then go to the next big low before it then starts to take off. And what you'll find is it gives you some support and resistance levels within that trend, and then it projects. So if I scrunch this up, it projects into the future where support and resistance might be in the future. So the way I've got this chart at the moment, you can't see what happens next. So we're just imagining that we are, you know, late 2016. Let's put it to. Oh, there you go. You can see it. So let's put it to. There we go. Just before it starts to take off. So notice how it does adhere to these levels already. So there's support and resistance. Okay, support where it goes down and it can't go any further, so it goes back up, and then resistance where it goes up and it can't go any further, so then it reverses again. Notice how what was support actually becomes resistance later on, like here. See there, banging its head on there. So support there, resistance over here. All right, I'll do another video on support and resistance, but it is kind of that simple. So let me just put in quickly where this says it might go. So I'm just going to put lines in here. So these would be targets. So way back when in 2015 and 16, we could have done that if we assumed that that was the low. You never know, but it was suggesting then that you could in the future go to these levels. So I'm just going to shove those in, and then we'll see as time rolls on how accurate that actually was. So on a weekly view, the highest time frame wins. Let's see how it unfolded. Let's see if I can just get more of the screen used here. Okay, so here we go. Okay, so there's the first big move here and here. So you can see it's actually sort of slightly out. So as it got to this point, I mean, it's not bad though as the target goes, you know. So like it was giving this area, and it was predicted from way back, like a couple of years beforehand. So not bad. But when you get to what you could do is you find this with technical analysis, just tweak it a bit and make it fit. So let's have a look. there, and I'm just going to move these up. So now, you know, you'll be like, oh right, yeah, whatever, Scotty, you just made it do what you want it to do. But notice how the actual ratio is perfect. This is the thing. So it's not always 100% bang on, but it can give you a damn good idea of where things might go. So having adjusted it, let's just move these up. See, look, the original one actually sort of tended to make that look alright, but there you go. Made one work and another doesn't. So if you take that as being the levels, let's see, and then the top one is pretty much bang on. I mean, there you go. That's pretty good, right? So that's something that is projecting. Sadly, that one there is now run out, so it cannot see into the future. But we can use other Fibonacci's on different parts of this graph to project further into the future. So I'll show you that. So hopefully that'll give you an idea of actually how powerful it is. You know, like, so you can see the levels it seems to adhere to during the move down, and then you can also see that it does adhere to these on the way up, particularly the actual ratios, which is what's important. So when that hit its head there, it gave you then already had the prediction of where it would bottom out. All right. And the same thing actually applies there. You'll see as it went there, you had this huge, what's called a rejection wick here, where it comes all the way down and bounces straight off, bounces there on the line precisely. And this here is a beautiful example of where what is resistance becomes support right here. So huge resistance and then becoming support there. And people, when they saw that, would have bought quite a lot if they knew what they were doing. So there you go. So that's Bitcoin projecting into the future. We could use a different tool. I'll let you do that. You can figure that out. I've given you the tool, one of the tools, so you can try and make your own targets. You'll see I'll do them on the Facebook page anyway. But before I go, let's just have a look at Ethereum. The same trick using the different method now. So here we go. Weekly on Ethereum. Maybe you bought Ethereum. If you did, well done. It's definitely worked out, as of many of them, to be fair. But so the next tool is the retracement tool. So I use this more often, just quick and easy. So what you do is you take the high on a move, and then you go to a low, like there. So I'm going to do that. Okay. So that's how you use it. Simply high to the next low. The next big low. Okay. So just a quick one on Ethereum itself. So when this plays out, this is a huge pattern over many weeks, and a lot of people were very excited in the run up to this because they know that this particular pattern is really powerful. So this is a pennant, a flag, an ascending triangle, loads of different words for it, but you'll see them lots and lots in any kind of stock prices and crypto. It happens all the time. So what they are is generally a continuation pattern, but they're not necessarily. What happens is that the price gets squeezed as time goes on, and what everybody's waiting for is when you get to this sort of end where these two lines meet, it's going to explode out one way or the other. Generally, it will be it will follow the trend, but not necessarily. They can actually break out either way. But what we do know is it will do something. It won't just keep going sideways. All right. So this is called consolidation, and then after that you get a breakout. And the old school way of measuring a breakout would be to do what's called a measured move. So from this bottom area here, the flagpole of the pennant, copy that, and then place it on from the high point, the resistance point there, and wherever that ends up there, excuse me, that will be the target. So that's one way of doing it. The other way, which is one here to show you, Steve, is the retracement tool. So take the top, go down to the bottom there. Hopefully you can see this. So I'm lining the bodies of the candle up. So not the spiky wicks, but the bodies. Okay, so there's your top, there's your bottom, and what this does is the same thing. It's giving us then potential levels. So what I'm going to do to make it easier to see is I'm just going to put those in. So, and then we're going to move forward in time and see how accurate this was for predictions. The first thing you can notice there is that the measured move is actually pretty close to this flagpole prediction. What did I call it? The measured move is close to the Fibonacci retracement, the first target, or second target. Okay, and here's another. So whenever you're seeing confluence of things, so this measured move here being similar to that, it just adds a bit more weight to the idea that that actually would be a proper target, somewhere that the price might find some future resistance, even though there isn't actually anything there. Okay, so there we go. So there are the levels in. So let's move forward and just see how it played out. And boom, there you go. So there's the first one. So this is predicted there. So let's see. Perfect. So the first target that Fibonacci would give you is absolutely perfect. Okay, and then as I mentioned on the Facebook post, what you're looking for there is a pullback. Ideally, once you get a breakout from this consolidation, what you really want is a pullback to the last high. So in this case, that's either here where the body is, or let me just put it in, the actual proper high is the top of this little wick here. So you're looking for a pullback to there, and you can see it actually did do it here. So it pulled back, and then loads of people, there we go, and then loads of people would buy on the breakout from here. Easy to see on a day. Maybe I'll just go into a day's view. Day. So there's the same thing. So there's the big pennant flag formation. If you were really good, you know, if you were right, really on the money, and you were paying attention, you would have got in somewhere around about here. Or probably just as it broke through this bit here, maybe would be early, and you would get the benefit of this here. So I was in here and then got out here, and then it's created another common shape, which is another continuation pattern, which is called a flag, or might be arguably a falling wedge, which is more a bit like that. Continuation, and you can measure these again by doing the same thing. Find the bottom of the move, go to the top, and then put it on from there, and that's a projection of where it might go next. Okay, and it's very similar to where Fibonacci tool suggests that you might go. In actual fact, it appears to have somewhat overshot it, but there's a good chance it'll just retrace back to here before it goes on its merry way. So you can see very hopefully pretty clearly, might be looking a bit busy now, but these two tools of using a measured move and Fibonacci retracement tool gives you pretty accurate targets. I mean, these are accurate enough to make a lot of money from, you know. And so if it was to fall again, it's you know, if it really did lose its way, we'd be looking at all the way down here then, potentially. All right, going forward, if it continues, you've got two more targets to go. Again, because it's creating yet another miniature, put it on an hour now. Let's see if there's any pattern here. It could be, who knows, but it could actually be starting to form yet another triangle, although we'll see. You don't know. It's nowhere near a phase where you could figure it out, but it's going to find some support where it is right now, and if it keeps bouncing up here, it might end up creating yet another triangle bullish pattern. And if it did, then the same rules apply. So you could take the bottom of the move to the top, so if that is the top, and then you could put it on there, and that gives you a target which is slightly above Fibonacci. One thing that I will also mention here is round numbers always tend to play out. There are huge psychological barriers. The current one here is obviously 800, so it's kind of been near it, not quite. If it's really bullish, it'll keep banging its head on that and finally break through it. The next big number would be 900, which is definitely in line with the Fibonacci number. Then very cool. The moonshot would be pretty much 1,000, so it makes total sense that that would be it. And you could easily imagine Ethereum going to 1,000. You know, not just because of these technical analysis, but just because people will be looking at Coinbase and going, well, Bitcoin's a bit pricey. Maybe I'll buy one of them other two. You know, I think there's a lot of that going on right now. So there you go. That's the fib-based retracement tool. Okay, and you can fib out anything you want, any kind of retracement you can do. So if we just take Bitcoin finally, and you know, obviously that tool kind of like you can't really use that anymore. That's in the past because we're way up here now. So if I put it onto a daily view and have a look at this, oh, what we got there? Well, sure enough, we've got another potential triangle forming. Maybe, you never know till they go, but if they do, so we've got this 17,000 at 17,000 we've got this huge amount of resistance here. I'm just going to bring this in here. Just, I know I'm going over here, but this here is the order book, and you can see where what they call sell walls. This is like a load of people with orders on saying that they're going to sell here. So that's at 1698 and at 1787, etc., etc. And these are Bitcoins. So like people are literally selling hundreds of Bitcoins at these levels. So if the price goes up, they're going to sell. So that's what's keeping. That's kind of how this resistance works. It's sell walls a lot of the time. You also get buy walls on certain things. But anyway, I'll do a video on that later on, but it's really useful. So so let's use the extension tool. So find the extension tool, retracement tool. Sorry, let me just make this about right. That's annoying. On the daily. So that's one way of doing it. So from the bodies. Oh, look at that. It's quite amazing. Yeah, there you go. 20,000 is well, not your next target. Your next target's actually just under 18,000. But you know, 18,000 is peanuts, isn't it? We need to get to 20,000. That's your next one. Then 22. We like the round numbers. And 23. So that's based simply on just the last big pullback here. Now I only used the bodies there. If you want to be a bit more dramatic, then you can use the wicks. You can see what that suggests. You know, we're getting totally different results here. That gets you closer to 30,000, which is, you know, I think it's highly likely. Okay, so there you go. Hopefully that was useful for you. Do let me know if that worked out, if it made sense. Probably too long, but just give me some feedback either way, and let me know if there's anything particular that you would like to know about. I'm more than happy to do this. It's a lot of fun. It's great. And if we can all make a shitload of money, then why not? Why the hell not? All right then, happy trading and good luck in the market. So I'll see you in the next one. Cheers.